Welcome to May's Business Outlook conference call. I'm Marilyn Wimp, and with me today is Mike Treby with Philadelphia Fed. He is the Senior Economic Analyst. I'm the Media Manager, and we're glad to have you here today. We're going to be taking some questions from reporters about what our manufacturers had to say this month. But first, Mike is going to give a brief summary statement of the survey. Mike?
Thanks, Marilyn. The region's manufacturing firms reporting for the May Business Outlook survey tell us that business fell off from the growth in the previous month. Indexes for general activity, new orders, and employment fell to slightly negative readings this month, while shipments remained slightly positive. Our price indexes suggest moderating price pressures for inputs, and for the first time in 9 months, more firms reported price declines for their own manufactured goods than reported price increases. But over 3/4 of the firms reported steady sales prices. While still overall positive, most future indicators reflecting the firm's outlook over the next 6 months fell notably this month, suggesting some deterioration in the outlook. And also our special questions this month addressed firms' production and employment plans over the next 6 months. And as in previous surveys, we asked for the most important reasons that were holding back hiring within their firms.
Okay, thank you. We'll have the first question from Kathleen Madigan of Dow Jones.
Well, obviously this contraction, the first in 8 months, is pretty stunning. And is it because there was fewer people reporting an increase, or more people reporting a decrease in business activity?
This month we saw about the same share of firms reporting increases, just dropped slightly from 27% to about 26, 27%. However, we saw a larger increase in the share of firms reporting declines from 19% to about 33%. So this month we saw some consistency in the drop in the indexes across most of the broad indicators, including employment. Last month we had some better employment numbers, if I remember right, but this time across the board, so it's looking more like no change overall, or possibly slight declines, which is different from the slight growth rates we saw in previous months.
Ellen Freilich, Reuters, do you have a question?
Yes. How much of an impact, what about prices? You said that more manufacturers reported moderating, well, that they suggest moderating prices for their inputs, but also more firms reported price declines for their own manufactured goods than firms who reported price increases.
Right.
Can you just elaborate on that a little bit, and in terms of, I'm thinking of potential deflation?
Mm-hmm. Well, we've seen some moderation in the input price measure the last few months. That number tends to move around a lot with
how much of it is fuel?
I think a lot of it is fuel. But it's hard to say. But it's been consistently falling over the last few months, and there were a few comments about energy prices this month, but not any definitive ones to balance the statistics that we calculate. But for the first time in 9 months, we did have slightly more firms reporting price declines than increases. Yet still, almost 79% of the firms are reporting steady prices for their own manufactured goods. So I think the story is, moderating pressures on the cost side, and this month, nearly flat levels of prices for their own manufactured goods.
Kathleen Madigan, do you have a question?
Can you just talk a little bit about the special questions? I mean, this combined with that negative employee index and the slowdown in the outlook index, it doesn't bode well for hiring.
Right. Well, we asked them, like we did last last May about production and employment plans over the horizon of 6 months this time. And we asked whether they expected to increase production, and found that 54% of the firms indeed had expectations of increasing production over the next 6 months. However, when we asked whether that would be accompanied with hiring, only 21% of the firms indicated that it would be accomplished by hiring additional workers, and the remaining responses were about 22% indicating that they would increase the hours worked without hiring additional workers, and another 17% saying that they would increase productivity without hiring additional workers. So although we're seeing 54% of the firms expecting production rises, only about half of those said that they would accommodate the production with increased employment. And then we also asked them about what factors were restraining hiring, and we have asked that question in an exact same way last May. And once again, the expected growth in sales, slow growth in sales was the primary factor at the top of the list in terms of the ranking of first, second, and third most important factors restraining hiring. However, in the ranking of the top 3 factors, the need to keep operating costs low represented about half of the firms responding as well. So there's this tug of war between low demand, I guess, and the need to keep costs low. Yet other structural elements were also listed prominently in their ranking, including ability not to find skilled workers and uncertainty about healthcare costs and other government regulations. Much lower in the ranking were factors such as lower labor costs and whether financial positions had deteriorated. Those were much less in prominence in the responses.
Ellen Freilich, Reuters, do you have a follow-up?
Yeah, by financial conditions having deteriorated, you said that was low in rank, but were they referring to credit availability? Is that the kind of financial conditions?
Yeah, we had a few firms cite in other factors credit conditions, but it was only 6 or 7% of the firms ranked that in the top 3 priorities, or in the top 3 problems that they were facing in terms of restraining hiring. So it looks like it's still a demand story, yet some of these other structural impediments still remain. And the rankings were very similar to what we saw last year.
Well, thank you both for joining our call. We appreciate you having joined us today. You've just been watching May's Business Outlook survey with Mike Trebbing, Senior Economic Analyst with the Philadelphia Fed, and with me, Marilyn Wimp, Manager of Media Relations with the bank. Please look for our survey. Next month, we'll be releasing it and posting it on our website at 10 a.m. Thursday, June 17th. We'll see you then.